So guys, this is your syllabus for macroeconomics, where you'll see 5 chapters working. Chapter 6, that is national income, where we are going to cover this chapter in 2 units, unit number 1 and 2. First is the macroeconomics aggregated measure of national income, and the second is determination of national income. Total weightage is 15%. It is approximate weightage. Don't take it as 15 marks only. It could be 10 marks, it could be 18 marks, 20 marks also. Okay, so approximate weightage given by ICAI is around 15%. Then we are going to approach chapter number 7, public finance, 4 units, 10% weightage, money market, 3 units, 10% weightage, international trade, one of the lengthiest chapters you have in your syllabus, macroeconomics I am saying, 10% weightage, and chapter number 10, one of the easiest chapters in macroeconomics with 10% weightage. Okay, you can just simply see the deviation of plus minus 5% in the weightage of the chapters. Okay, today we are going to start with the national income wala part. Got my point? National income, guys, see, you have already studied national income in your PU2, right? The level of understanding of national income in PU2 and the level of understanding of national income in CA foundation is way different. In PU2, just because it is your core concept there they teach all the things in depth. With every element they'll explain you the national income. Here in CA foundation, to cover these 15 marks, national income need not be studied in depth. I mean, whatever topics are explained here, they are not analyzed here, right? You will understand the creamy part of all the concepts we are going to touch. But from my side, I'll try to give you the reasoning part of every concept. It means if I say that this particular thing is like this, why, I'll try to tell you that. Okay, so please understand those things with me. In case of any doubts, you can stop me and you can ask a doubt from me, right? Shall we start with national income? Yeah. Chapter number 6, that is national income. See people, let us understand the basic meaning of national income first. Okay, you can see that there are 2 terms which are being used here. First is national and the other word is income. They may sound very simple words to you, but let us understand the technical meaning of these 2 words also, right? What do you mean by national? National means anything related to a nation. I mean anything which is for the nation, which is related to the nation, is what we call national. For example, national anthem, anthem of a nation, national bird, bird of a nation, national flag, flag of a nation, correct? Then the second term is income. This is something which is really important here. What is income? See guys, we can compare 2 things here. First is money earned, and the second is money received. In layman terms, we will say that both the monies, what we are earning or what we are receiving, they will be our income. But it is not like that. From the point of view of national income, the things are different. Correct? Here, when we say money earned, try and understand. Money earned means what? That you are rendering services or you are selling goods, then you are earning money. Money received is like one person doing donation or doing charity. For other person, it will be money received. It means if we donate, let's say 1000 rupees to someone, we do a charity of 1000 rupees with someone, in that case, for the other person, it is not money earned, it is money received. He has not done anything to get that money. When we say national income, we don't talk about money received. We always talk about money earned, right? So if I just combine these 2 terms, national income together, What will be the meaning of national income? Income earned by a nation. Are we clear with this thing? One more catch. Income earned by a nation is okay, but income earned by a nation in 1 year we will do. It means the estimation we are going to do, the recording of transactions what we are going to do will be for 1 year. So in national income, whenever we talk about the things, it will be in the span of 1 year only. Are you clear with this thing? Yes or no?
Yes.
But to understand the concept of national income, there are certain basic terms which are used in this particular chapter very repeatedly. So I'm starting this chapter with those basic terms. When we study these basic terms, we will understand what are these terms, and when we'll use them in making formulas, in understanding the concepts, it will be very easy for us to go ahead with the concepts. Correct? These terms are, I'll just write all the terms one by one and I will just explain the terms side by side. For example, the very first thing is gross value, the symbol for which is G. Now what is gross value? Gross value has a separate meaning in every subject. I'm talking about the meaning of gross value in economics. Gross value means value of goods and services before charging depreciation. I hope all of you understand what is depreciation. Yes? Depreciation is the reduction in the value of asset. What you study in accounts, that is, it has the same meaning here. Right? So before you charge the depreciation, before that, whatever value of goods and services you will take, that will be known as the gross value for national income. For example, in the year 2021, if you buy a machine A, let us say for rupees 10 lakhs, and in 2024, you want to sell this machine, will you get the full amount? No. Correct? Let us say in this year, if we sell this machine, we will get only 8 lakhs. So this reduction in the value of asset, the reduction in the value of machine, because we have already used it, it is a second hand machine, it will be 2 lakhs. This amount will be known as depreciation. Amount or the value of machine before charging depreciation will be known as gross value. And after we charge depreciation, this will be known as net value. Do we understand this thing? So 3 terms I have discussed with you. First is gross value. Second is net value. The symbol will be N. And the third is depreciation. Are you clear with this thing? Any questions here? Sorry?
In service, how depreciation?
Okay, so this is what I was talking about. In economics, we don't talk about tangible or intangible assets separately. For the purpose of national income, we talk about goods only. Goods we trade, goods we transact, that is it. I do understand why you are asking this question, because from the point of view of accounts, there are different types of goods. But that is limited to the accounting part only. Economics ka study is the study of the economy, how a nation is working. When you study accounts, that is a very, very specific study according to the accounting standards, according to the limited rules and regulations. Here, we're talking about the general goods and general services. So there is no tangible or intangible goods separately for the purpose of national income. Are we clear with this thing? And anyways, we can understand one more thing. If at all it is impossible to charge depreciation on some goods, we will not charge a depreciation. That will be the gross value only. Right? And few more things are there. I will discuss in the upcoming part. You will understand that part also. This part is clear? Any questions, any doubts here? Sure? Okay. Moving to fourth point. domestic product, and fifth is national product. Guys, what do you think? India is an open economy or closed economy? Open economy. How can you say that? Exactly, because we are not limited to the national market. We have a good approach towards the international market also. Correct? It means what? It means we people like Indians, we go abroad, we work there, we earn money there, and we bring that money in India back with us. Yes, and vice versa. Foreigners, they come here, they work here, they earn money here, and they take that money with them to their home country. On this base, we will understand domestic product and national product. It is about the income, right? Understand the thing. Any citizen or any person in India, within the boundaries of India, whatever production he is doing, the value of this production, I'm talking about in totality, all the people within the domestic territories of India, whatever production they will do, the total value of the production within India, the total value of production within India is known as domestic product, is known as the value of domestic product. So if these are the boundaries of India, whatever production we are doing within India, we calculate their value and we take that value as domestic product, or we can say DP. Do we understand this thing? For national product, guys, NP, how do we approach NP? Understand this thing, please. Within India is okay. Now, what if some person is moving to any other part of the world? ROW basically means rest of the world. We are going to any other part of the world. We are working there. We are earning money there. And we are taking our money back to our home country. Similarly, any person coming to India, working here, earning money here, and taking that money to his home country. When you adjust this part of income with the domestic product, that will become national product. Do you understand my point? I went abroad to take lectures. I went there. I earned, let's say, $10,000. I came back to India and I brought that money with me. It will be added to DP. Do you understand this part? We had to perform a surgery in India and you had to call a specialist doctor from abroad. He came here, he did the surgery, he took his fees and he took that money with him to his home country. We will subtract that part from the DP. Are you getting a point? So when you adjust this inflow and outflow between India and rest of the world with DP, that will become national product, NP. Are you clear with this part, guys? Yes or no? Okay, till now we have done 5 parts. What is gross value? Value of the goods or services before depreciation. Gross value is before depreciation. Net value after depreciation. It means if I ask you what is the difference between gross value and net value, you should simply say, sir, depreciation. Do we understand this part? What is domestic product? Value of total products which are produced within India. That will be domestic product. Achha, in how much time? I told you whatever we are doing will be for 1 year. So if you are calculating DP also, that will be for 1 year only. What is NP? National product. How do we calculate it? With DP, sir, we are adjusting 2 things. What? Inflow of money from rest of the world and outflow of money to the rest of the world. When you adjust these 2 figures, we will get national product. Do you understand this part? Sure. Sir, what type of income you are specifying here? What type of income we are going to adjust here? Let us understand that part also, guys. There are two types of incomes we will study. First is factor income, and the the second part is transfer income, the seventh point. Guys, any idea about factor income?
So, which is earned by the rendering means
Rendering what? Rendering services, you are saying?
rendering services.
Okay. Let us make it simple for everyone. What is factor income? Let us simply say it is the income earned by factors of production. But how many factors of production are there? Name them. Land, labor, capital, and organization, or you can say entrepreneurship. Correct? I'll tell you one more factor here. It is a new thing for you, maybe. One more factor. First is land. When you render service of land, what do you earn? Rent. That is the first type of factor income. When you render the service of labor, what do you earn? Wages. Okay, so that was labor, right? So the income for labor is wages, or you can say it as compensation of employees. I'm just putting an asterisk here, reason being, but this is a very broad term. Compensation of employees is a very broad term, right? So we will explore this term also. Abhi, when we'll do the methods of national income, no, we will explore this term. Okay. So land, labor. Third is capital. What do you get for capital? Interest. Very good. Fourth is organization. What do you get for organization? Very good. Now, just try and understand the fifth point with me. Although we don't consider it as a separate factor of production, it is a combination here only, but we have to understand few things here. Fifth part, I'm talking about people like me. Sir, what do you mean by people like you? Self-employed people. For example, let us say that I am running my own company. Correct? I am the owner of the company and I also work in that company. Correct? As an owner, I should get profit. Yes or no, people? And as a person who is working for the company, I should get the compensation. Correct? Let us say my company gets a work order to take a CA batch in a particular college. For that college is paying me 50 lakh rupees. For example, I am saying. Now, when I will receive that money, what I should consider it? I should consider as my profit, or I should consider it as my compensation of employees. What do you say? The money I am receiving from the college as a fees, it should be profit for me, or it should be a compensation of employees for me, because I am the owner also and I am the worker also. Don't put strain on your mind. It's very simple. It is a mix of profit and wages. Can you really segregate that this is my profit and this is my wages? No. When you pay fees to a doctor, do you think that doctor can really segregate, if I'm receiving 500 rupees from this patient, 300 rupees is my profit and 200 rupees is my wages? No, he will never do that. Yes or no? So fifth part we will study here, which is very much important for us, is the factor income of a self-employed person. That is what we call mixed income. We'll call it mixed income. Are we clear with this thing? So we have 5 types of factor incomes here. We have 5 types of factor income here, which are rent, wages, interest, profit, and mixed income. Are you clear with this thing? Sure. Any questions here? Guys, from now on, whenever I will refer to factor income, try and understand. I will refer to these 5 incomes. Are you clear? Yes or no? What do you mean by transfer income?
Which income unbridled without giving any subsidies.
Or let us simply say, transfer income means unilateral transfer, one way transfer. Let us say one way transfer. One way transfer means what? Where only one person is paying money. In return, he is not getting anything. I'll give you one example, practical example I'll give you. Abhi, if you remember, very recently in Sri Lanka, there was a crisis. Right? It was an economic crisis, a very severe economic crisis. What happened at that time? India, being a good neighbor, what India did? India paid a certain amount and some grains to Sri Lanka. From the point of view of the concept we are studying, try and think and tell me, for Sri Lanka, the money Sri Lanka received from Indian government will be a factor income for Sri Lanka or transfer income for Sri Lanka? Transfer income. Why? But sir, because Sri Lanka has not done anything in return to that money. Yes or no? So for factor income, we always work and then we earn money. This is money earned. And that is money received. Are you clear? Beta, when we will move ahead with the national income ka concepts, try and understand, we never include transfer income in national income. Sir, why? Because I told you, national income means money earned. It does not mean money received. It means national income. This income is referring to factor income, but not the transfer income. And if I get to the meaning here, when I say national income is the income earned by a nation in 1 year, what type of income? What type of income earned by a nation? Factor income, I am saying. Are you clear with this thing? Yes, of course. Chaliye, badhiya. Factor income done, transfer income done. I am discussing 3 more terms here and I want you people to pay attention. 8th is, we call it FIFA. Just for 2 minutes, pay attention here. Factor income from abroad. Since you know the full form, I hope you know the concept also. Right? We'll discuss it. So we are going to discuss FIFA, we are going to discuss FITA, and we are going to discuss NFIA. That is net factor income from abroad. Okay. Let us start with FIFA. What is FIFA? FIFA is factor income from abroad. Now, but what is factor income from abroad? Look here, please. Any person from India going to any place rest of the world, working here, earning money there and repatriating the money in India. For India, it is money ka inflow. What type of money is inflowing in India? Factor income. Sir, why factor income? Because he is working for it. Yes or no? Right? So this will be, for India, it will be factor income from abroad. Are you clear?
Yes.
Factor income to abroad, FITA. Means this is, if this is India and this person, a foreigner from rest of the world, comes to India, works here, earns money here in India, and takes that money with him to his home country. This will be outflow of money from India. So it will be factor income to abroad. Inflow is from abroad, outflow is to abroad, right? Remember this thing. This is inflow and this is outflow. Are we clear with this thing? What is NFIA? NFIA is nothing but the difference between factor income from abroad and factor income to abroad, right? So NFIA can be calculated like FIFA minus theta. Guys, a very important point to be understood here. Please pay attention, everyone. NFIA, if the value of NFIA is positive, what does it mean? It means that FIFA is more than theta, or we are receiving more what we are paying, or inflow is more than outflow. Yes? If the value of NFIA is 0, it means FIFA equals to what we are receiving is same amount what we are paying, means inflow is equal to outflow. If the value of NFIA is negative, then FIFA is less than FIFA is less than theta. Means what? We are receiving less, paying more. Inflow is less than out. Are we clear? Sure?
Yes, sir.
So this is FIFA, theta and NFIA. Guys, whenever we talk about DP and NP, I'll just move back to this concept of domestic product and national product once again. Try and understand difference between DP and NP is the income we are receiving from abroad and the payment we are making to abroad. So there are two ways to record it. Try and understand. Two ways to record it. Look at me, please. First, I record FIFA separately and theta separately. Means FIFA is inflow, I will add it. Theta is outflow, I will subtract it. So these are two entries. I can do this thing, or simply, what will I do? I will take the net effect of these two transactions and I will simply add NFIA if I have to calculate national product. I mean, if I have to calculate national product, what will I do? I will take DP, I will add NFIA to it, and I will get my NP. Right? So that is a good way to record the transactions. Let us not record two transactions separately, but their net effect at one time. How we do that, I will tell you. We will discuss the formula making, I will tell you that also. It is easy to do that. I mean, no rocket science. Done? Shall we move in? Badhiya. Guys, a very simple term. We are going to discuss what is tax, what are indirect taxes, and what are direct taxes. What is tax? Let us make it very simple. A part of income paid to the government. A part of income paid to the government is tax. Right? What is indirect tax? You are consumer, this is government. When you are paying taxes, but not directly to the government, but in an indirect way, you pay taxes to the seller. I'm taking the example of GST here. You pay GST to the seller, and seller further pays that GST to the government. Ultimately, the burden of tax is on you only. But how you are paying the tax to the government? Indirectly through a seller. So taxes like these will be known as indirect tax. Example is very clear. GST. Are you clear? Excise duty also. Excise duty you don't pay to the government directly, but indirectly. Are you clear? Direct taxes. Direct tax means the part of income you are paying, or let us say like this: the person whose income is being taxed, we call him assessee. We call him assessee. When the person whose income is being taxed pays the tax directly to the government, that will be known as direct tax. For example, this person earning money and paying income tax directly to the government, this will be known as a direct tax. Simple. Are you clear with this thing? So guys, think on one thing and try to understand, just answer my questions. When you pay taxes to the government, don't you think that you have one right to ask government, "Arey bhai, where are you using my taxes?" Can you raise this question or not, guys? Achha, as a government, you think, if as a government, like you are the government, and I ask you, the taxes I'm paying to you, where are you using those taxes? What will be your possible answer? Bataiye. Infrastructure, education, health, defense, etc., etc. One more thing you will add. What? Sir, subsidy. For example, LPG cylinder, yeah. LPG cylinder, let's say the actual cost is 1100 and government is giving that cylinder to you for rupees 850. Just for example, I'm saying. The difference of the actual price and the price you are paying, it is a relief for you. It is a benefit for you. Right? Who is giving this benefit? Government. And what do you think? How this government is managing to do this, give this benefit to you? Because government is earning income. Government is having a pool of funds from where government can manage to give the benefits to the consumers. Yes or no? Yes. Correct, hai na? This benefit we get from the government in lieu of taxes for national income, we call it subsidy. We call it subsidy. So, if I write here only, what is subsidy? Benefit passed by the government to the consumer in lieu of taxes. In lieu of taxes. What do you mean by in lieu of taxes? In return of taxes. Just because you are paying taxes to the government, government is passing benefits to us. Are we clear? But sir, everybody will not pay the taxes. No, it's okay. It's okay. What we are trying to do is, we are trying to equalize the things. Understand the thing, please. We are trying to equalize the thing. If a person is earning more, he is paying more taxes. And that money we are using it for the people whose income is a bit less, who are not able to satisfy their needs and wants. We are trying to maintain an equilibrium in the market. Are we clear? Yes or no? See guys, we cannot fill this gap properly, but we can minimize this gap, and that is what we're trying to do. Do we understand this thing? These are the next four terms, which are tax, indirect tax, direct tax, and subsidy. Any questions here? Talking about the treatment, how these four things will be treated in national income. Okay, for government, tax is the income, but for us, it is an expenditure. Yes or no? So, what do? If you are paying tax of rupees 100, listen to me carefully, please. If you are paying tax of rupees 100 and you are receiving benefits of rupees 30 in return, ultimately, what is the burden on your pocket? 70? Yes or no?
Yes.
So, what we do is, how we treat these taxes, we adjust subsidy in the taxes and their net effect we will include in the national income. Are we clear? How that works, we will discuss in the upcoming part. Correct? One more thing. But a treatment of direct tax and indirect tax is way different in national income. Right? Do understand this thing also. Tax, like direct tax, will be treated in a different way, and indirect tax will be treated in a different manner. How to do it, we will discuss it about it. Okay? Chaliye, shall we move in? आगे बढ़े? Okay, so guys, next term we are going to do is market price, that is MP, and 16th is factor cost, that is FC. Are you clear? Any idea what is market price? Price of a market.
Actual price.
It is a price at which goods and services are sold in the market. So for example, if I buy this pen from the market for rupees 5,000, it means what is the market price of this pen? 5,000. Are you clear? So it is a price at which goods and services are sold in the market. What is the factor cost? I am taking some value to explain you what is the factor cost. It will help you to understand the concept in a better way. Okay? Please pay attention on the board. Everyone, stop writing and please pay attention on the board. Please. Let us say that Mr. X pays 110 for commodity A. Okay, the bifurcation of this amount is price of the commodity is rupees 100, and there's a part of GST here, let us say 10 rupees. Okay, now let's say this amount has been paid by X to Y. What is the market price of commodity A? 110. Yes or no?
Yes.
What is the income of Y here? When he will receive 110, what he will do, that moment only he has to divide this figure into two parts. 100 rupees for his commodity and 10 rupees he should directly transfer to the government. Yes or no?
Yes.
What we will do here is 100 rupees is the money what has been received by Y, his own money. Since he is working for government there, he is collecting taxes from the consumer and he is paying that tax to the government. Yes or no? Ultimately, government is receiving the tax. When government will receive tax, obviously government will give subsidy to Y. Yes or no? Yes or no? He paid 10 rupees tax to the government and in return he received 3 rupees का subsidy. अब analyze the situation and tell me ultimately how much amount Y received in his hand. बोलिए. Guys, I'm Y. 110 I received. 10 rupees I paid to the government. How much money is left in my hand? Just because I'm paying taxes to the government is giving subsidy to me. How much subsidy? How much money is there in my hand? Right? This actual amount, what seller will receive, will be known as factor cost. Are you clear? Sure? So this is the actual income of the seller. How do we calculate it? Market price minus indirect tax. We are not talking about direct taxes here. We have paid indirect tax to the government, so minus indirect tax plus we are receiving subsidy, that will be known as factor cost. Are we clear? Yes or no? Whatever we are paying, subtract it. Whatever we are receiving, add it. The beauty of this chapter is you need not by heart the formulas. If you know the concept behind it, you will understand it. Are you clear with this thing? Everybody, yes? चलिए, बहुत बढ़िया. The tax is actually being paid by the consumer. Mr. Y here as a seller is just the mediator between government and the consumer. Government specifically says that I will not collect GST directly from the consumer. Why? Why? Very simple thing. As a government, when I know, guys, listen to me carefully. As a government, when I know that GST ka rate is 10%, and I am saying I will not receive this amount directly from the consumer. Consumer has to pay to the producer and producer will pay to me. Why? Because I want to keep a check on him and him also. How much money he is spending and how much money he is earning. So that when they will file their returns, I can cross check whether they are paying correct amount of tax or not. Are you getting my point? For example, he has claimed that he has paid 10 rupees tax to him and he has not deposited that tax with me. When he will claim, when I will assess him, I will see he has paid tax to 10 rupees tax to Y. I will cross check the entry. Mr. Y has paid that 10 rupees to me or not. He has not paid, it means he is trying to evade the taxes. I will catch him. Sir, you received 10 rupees from him, no? Where is that money? It is kind of a check. Check on every part whether all the people are working in a transparent way or not. Are they revealing their income correctly or not? Are they paying taxes correctly or not? Right? That is why we don't pay the GST directly to the government. Okay?
If the consumer paid indirectly to government tax,
Hmm.
then government why paid to sellers, why not subsidy?
Okay, tell me one thing. If I ask you to work for me and I will not pay anything to you, will you work for me? The government simply says you collect GST from the consumer for me. It means through you I'm trying to keep a check on consumer and through consumer I'm trying to keep a check on you. Both the ways you people are working, you people are helping me to keep a check on each and every one. Correct, Anna? That is the reason, just because he is helping me to keep a check on your income, I'm giving subsidy to him. And just because you are helping me to keep a check on his income, that is the reason I'm giving a subsidy to you. So that the things should remain equal.
In case of if it is directly tax paid, then the
In case,
directly tax paid,
hmm,
the government subsidy provided to that consumer.
government will, not only consumer will make the direct taxes ka payment, companies also pay direct taxes to the government. How? Corporate taxes, tax on the profit, yes or no? So, I'm saying in our economy, everybody pays a direct tax also and indirect tax also, only if they are eligible. Only eligible parties I'm talking about. So when they pay taxes, they receive the subsidies also. It means people who are not paying taxes, they are also getting the subsidy. I told you, no, we have to bridge this gap of income, this unequal distribution of income. We have to bridge this gap. So we are doing it. Are we clear with this thing, guys? Sure? All right. One of the most important concepts of national income, guys. Okay, what are raw materials? Can we simply say unfinished goods? They are raw. What are intermediate goods? Semi-finished goods, yes or no? Final goods? Which are ready for the consumption. These goods are ready for consumption. Correct? Hai? In national income, we don't take the value of raw material. We don't take the value of intermediate goods. But for the final estimation, we always take the value of final goods. Right? Sir, why? One of the good reason is to avoid the cascading effect in the economy. Sir, what is cascading effect? Effect of double counting. Clear hai? Sure, guys? I'll come to that. Give me 2 minutes. I was expecting this question actually. Exports, imports, and net exports. Exports are represented by X, imports by M, net export by NX. Okay, what are exports? Value of goods and services sold to rest of the world. Yes. What are imports? Value of goods and services bought from rest of the world. What are net exports? Difference between export and import. NX equals to what? X minus M. Okay. 3 things, pay attention, stop writing please. 3 things, pay attention. If the value of NX is positive, means what? Exports are more than imports. 0, negative,
Export is more.
correct? Acha, we are saying net export here. What if I say net import? For example, if the net value of net import is 20, what will be the value of net export? Minus 20, very correct. When I say net import means what? That imports are more than exports. Generally, we say net export. Why? Because it is our ideology. We think, we assume, we prefer that we should sell more and we should buy less. That is the expected thing. What actually will happen, that is a separate thing. Right? We plan to earn more, but sometimes we might have to pay more than what we are earning. So generally we will use net export only. But if at all you see in the questions they are writing net import, don't worry at all. What we will do is we will take negative value of net export. So if net import is 20, net export will be minus 20. Are we clear with this thing? Sure. Any doubts, any question? Okay guys, so we are moving towards the 3 basic adjustments which we will need in the upcoming topics to make the formulas. So we are not going to by heart the formulas, we are going to understand how to make the formulas. For that, 3 adjustments are required. First, the adjustment between gross value and net value. Second adjustment between domestic product and national product. And third adjustment between market price and factor cost. Okay? If you remember the things from PU2, good. If you don't know, it will be the first time you will be doing. And if you know that you have done this thing in PU2, it will be a brush up for you so that you don't do it wrong. Okay? It's a very simple thing, guys. Which value, if I compare gross value and net value, what will you adjust in these 2 values? Depreciation. Okay? In domestic product and national product, what will you adjust? NFIA. NFIA equals to what? Which is further equals to FIFA minus theta. And third thing we are going to adjust is market price and factor cost. The difference will be NIT, that is net indirect tax, where NIT is equals to indirect tax minus subsidy. Now, let us understand the first adjustment, that is between gross value and net value. What do you think? Which value is on a higher side, gross or net? Net is on the lower side. Guys, just for 2 minutes, put down your pens and just look at the screen. If gross is given and you are asked to find out net value, it means you are moving from gross to net, from higher value to lower value. How will you do it? By subtracting the values. If I ask you to move from net to gross, net which is a smaller value, G which is a higher value, how will you do it? By adding. Adding what? Subtracting what?
Depreciation.
Do we understand this thing? It could be same as your PO2. So gross value equals to what? देखिए, I'll tell you one very simple thing. Whichever value to find out, right? Cover that. Look at this screen, please. Cover that value. If you have to find out gross value, cover it. Formula will be net plus dep. Formula will be net plus dep. If I ask you to find out the net value, gross minus depreciation. Very simple thing. No scope of confusion. Chalega? Gross will be equal to net plus dep. Net will be equal to gross minus depreciation. Second adjustment is between DP and NP. What do you think? Which value is on the higher side? NP or DP?
NP.
NP. Why?
Because of national products.
Because in NP we are crossing our boundaries and moving to the international market. It has a wider scope. Correct? Same thing. National product to domestic product plus what?
FIA.
So what will be the possible formula for NP? Cover NP. DP plus NFIA. DP. Cover DP.
NP minus FIA.
Are we clear?
Yes, sir.
These two points clear hai? Third. MP and FC. What do you think? Which value is on the higher side?
NP.
Minus plus what? Net indirect tax. Right? Means MP equals to and FC equals to. Are we clear, guys? Correct? If you understand this thing, I'm going to discuss one thing with you people and then we are going to start making the formulas. Try and understand, please. I'm trying to tell you the two extreme values of national income. Extreme values. The most impure value and the most pure value. Right? Compare G and N. Compare gross value and net value. What do you think? Which value gives you the correct financial position? Net or gross? Why? It is the value after depreciation which tells you the current value. So, net is the pure value and gross is the impure value. Yes or no? Compare DP and NP. Which is the correct value for you? Which shows the correct financial position? DP or NP? DP or NP? How many of you are DP? Raise your hands. NP, raise your hands. Correct. Because we are open economy. We are not only working within the domestic territory of India. Import, export, FIFA, FITA, everything is there. Yes or no? So for India, the correct income will be reflected not from DP but from NP. Correct. Impure value, pure value. Okay. MPFC. Which value tells you the correct income? MP or FC? FC, because that is the in-hand income after adjusting tax and subsidies. So MP is the pure value, impure value, and FC is the. So if I ask you to calculate the value of national income, You will go with the pure value or the impure value? Pure value. That is the reason national income is written as NNP at FC. Clear hai? Makes sense? And GDP is the most impure value. It means first hand information that what could be our possible value will be reflected with GDP MP. After doing all the adjustments, depreciation, FIFA, FITA, indirect tax, subsidy, we get the exact value that where are we standing. It shows, GDP MP shows that the expected rank could be this. NNPFC shows exactly you are here. There could be a difference, but GDP MP will give you a very broad idea about the working of your country. That is why whenever you measure growth of any company, the first aggregate you use is GDP at MP. Then you do the adjustments, and ultimately to get the final value of your economy, you have to find out NNP at FC. Do we understand this part? Yes?
Yes, sir.
Sure?
Yes.
Okay. Now, let us say we have to find out NNPFC, but how do we do it? If we have GDP MP with us, pay attention. We will divide this formula into three parts. First adjustment, second adjustment, third adjustment. Gross value is given. Net value you have to find out. Net you have to find out. Gross minus. Correct hai?
Yes, sir.
DP is given. NP you have to find out.
Yes, sir.
DP is given. NP you have to find out. Plus NFI. MP is given. FC you have to find out. MP minus. By FC is find. You have to find out. No. Cover this. MP minus. Here you get the formula to calculate NNPFC from GDP MP. Do we understand this part? Right? If you understand these three adjustments now, you are through with the basic formulation of the formulas of national income. Very simple. Very, very simple. Let us try one more formula for your practice. If I say you have to find NDPFC, find it, and given is GDP MP, how will you do it? On the screen, everyone. NDPFC we have to find out. GDP MP is given. Guys, gross to net. Very good. DP. DP is given. DP we have to find out. No adjustment required. MP is given. FC you have to find out. You have your formula. Are we clear? Right? This is how we make formulas for the basic accounting of national income. One more thing. Just for your reference, this is what we call accounting. Actually, this is the way we are finding the national income. The process, the rules, regulations, the way, the technique we follow to estimate the value of national income is what we call, listen to me carefully, is what we call NIA. National Income Accounting. So if I ask you what are we doing, We are doing accounting of what? National income. It means what we are doing is a national income accounting, NIA. Are you clear? Whatever we are doing is a part of NIA, guys. Okay, it is a part of NIA only. Are we clear? Sure, guys. After this, directly we will land on the methods of estimating national income. What you have already said in PU2, value added method, also known as product method. Then we'll study income method, then study expenditure method. After these three methods, we're going to practice some questions, and unit number 1 will be almost over. Few more topics, unit number 1 will come to an end.